Crypto.com has a series of data on the number of wallets, active wallets.
Yes.
Now, many of us have lots of wallets,
Yes.
but the number is 516 million. Even
Correct.
last year, when the market was down, in 2022, when the market was down 75, 80%, wallet numbers increased by 42%. Now, they've been growing on average about 100% a year. So I don't know how many active crypto users there are, really, truly active daily users, about 5 million, I think, globally. As you said, not a big number.
Yes.
Now, that'll double, and then it's 10 million, and then it's 20 million, then it's 40 million. And it doesn't take long. You know, introduction, I know India's working on it, for example, the central bank digital currency, that'll be on blockchain rails. And before you know it, you've got 1 billion people in India just using blockchain. Now, somewhere that accrues to the underlying blockchain technology through the token stack. So, yes, it's just going to continue to grow. And I think maybe even though the wallets have been growing at 100% a year, we might see further acceleration in the daily users that is faster than 100% a year. It could be 2, 3, 4, 500% a year. Firstly, educate yourself. I know it seems like I don't want to do that. I just want to make money.
Yes.
You will massively increase your probability of making money if you understand what you're doing. Understand how to trade if your time horizon is trading, or how to invest. What to invest in is the other really important thing. So I think that is, it can't be more important. You have to be patient. But this space moves fast enough. You don't need leverage in a space that, you know, Solana last year was up 10x.
Yes.
You know, you put a few thousand rupees into that, that's suddenly a lot of money, right? So people just need to focus on learning what this space is about, what the real opportunities, and how the actual people make money. Because if they were to actually find the truth and say, well, who's made the most money out of crypto? Almost all of those people have been long-term buy and hold investors. I don't know many people who've made money from trading. Even if they do, it may be 10% or 20% of their book, and the rest is buy and hold. So firstly, people need to understand that. So I would urge people to think, if you're looking at your career, aim towards a fast-moving industry. Crypto and AI are the two fastest of all. And learn from being in business, because you learn a lot, but then you'll also get paid in some tokens as bonuses. You'll have a stake. You can move on. You can build your own business. Bitcoin itself has the same kind of value proposition as gold. You know, it's scarce. Nobody can create more of it, even less so than gold, because you can still mine gold ad infinitum. So it's a scarce asset that's digital. Think when you bought your house, how complicated it was. Think of all the middlemen. Think of the lawyers you paid, the contracts that were drawn up. Think of the surveys that had to be done. Think of the real estate agents, and then imagine that being done instantaneously in a smart contract. Imagine you'd be able to buy anything instantaneously. And again, people in India are understanding it more than many because of Aadhaar and the KYC elements. You can essentially KYC with your fingerprint. I'm talking really about Bitcoin when it comes to that. The actual value, a measuring value here, is actually Metcalfe's law. So Metcalfe's law was developed around the phone idea about, you know, what is the value of a phone network? If you've got one user, you can't call anybody. You got two, doesn't really help. You got 8 billion, it's one of the most valuable commodities in the world, right?
Right.
So Metcalfe's law is the value of a network. And what it says is the number of users of the network. Basically, the value of the network is the number of users of the network really multiplied by the number of applications. I know that there's a slightly different definition because it's number of users squared, but really what it's saying is a lot of people on the network and a lot of people using the network. That you can actually value by formula. This is how Amazon works. This is how Apple works. This is how Google works. And so That's how you value a lot of these technologies that have underlying networks. That's why Reliance is so valuable, because it has both an energy network and the mobile phone network and the data network that's built on top of it. When I first dug into Bitcoin in 2012, I saw it as a way of storing all traditional securities. Because at the time, we'd just gone through the financial crisis and the European crisis, and banks were blowing up. And what happened was people thought they had their assets in a bank, and they found out that they weren't their assets. They were the bank's assets. And when Lehman Brothers blew up, people realized that the same collateral was being relent 30, 40, 50 times. So when it comes to bankruptcy, you've got a small portion of what you thought you should get. And I thought, well, when I first saw Bitcoin, I thought, okay, we can use blockchain to figure out who actually owns what in a very levered financial system. So I thought, well, there's the new big application. The token itself, interesting, but the blockchain technology, interesting. That's what I first wrote about. That hasn't played out yet. So that was 2012, and here we are 12 years later, and that hasn't happened. Also, in the last cycle, it was DeFi and NFTs. New uses of smart contracts. It's an applications layer on top of smart contracts, which is on top of the blockchain, right? So you can see how we're building. And so NFTs this time around, or last time around, were art and PFPs, community-based stuff. But that's just the start. When you've got something like Solana, that you can now mint 1 million NFTs for $100, well, we can use that for tickets. So why does not the Indian railway system have tickets all on blockchain, on NFTs? And if I can't make the train, I can just sell it to somebody else. That's a very efficient way of using capital, or for concert tickets or cricket tickets or whatever it might be. So my view on this coming cycle, it's more of an everything, everywhere, all at once cycle, because I think a lot of the key technologies have been built.
Right.
And now it's the application. So about 65 billion went into venture capital in the last cycle.
Right.
That should come through to applications and projects in this cycle. So I think we're all going to be a little bit shocked by some of the things that happen, much like we're all a bit shocked by AI right now, because there's a new innovation every day. So there is no intrinsic value in gold. Gold is just valuable because we like it. So then when your dad buys himself a new expensive watch, you say, well, why that? Because the intrinsic value of the watch is what? 100 rupees, because you buy a watch on the street from, it doesn't cost anything to make a watch. But they don't, they will pay this huge premium because they want the Rolex, because I'm like, well, really? Are you trading intrinsic value here, or are you buying a status symbol?